Today we're going to be looking at ICT kill zones, and you must have heard these terms floating around. I'm going to eradicate all the misconceptions or any struggles that you might be having with kill zones. So ICT kill zone, what are they? First of all, let's grasp what they actually mean. ICT goes on a lot about time and price, okay? But what is time and price? Time and price is basically just supporting this whole concept of the trading market. The charts move in an algorithm. There's an algorithm behind it, and things happen at certain time, and it affects price, basically. That's why time and price. So these kill zones essentially are pockets of time where specific things in the market happen, and these things repeat themselves over and over again. And that's actually going to be your homework for today, is to go on the charts and mark out these timings and see what happens during these timings every single trading session. So there's mainly two that I want to cover: the London kill zone and the New York kill zone. I personally trade London, so the London kill zone is something I'm more familiar with, but I will touch upon the New York kill zone too for you guys. And by the way, if you want to, if you still have any issues or struggling with anything in trading, just book a call with me down in the description below. It's completely free. Just hit that link and book a call with me and I will help you out. But let's get into the London kill zone first. So what is the London kill zone? The London kill zone occurs between 2 a.m. and 5 a.m. It starts at 2 a.m. and 5 a.m. New York time. So as you can see below here, I have my charts, my timing set to UTC -4. This is New York time. It just makes everything easier because, right now it's 8 a.m. New York time, something like that. It makes everything easier to understand. So yeah, do that as well. Set your charts to New York time. And the times you'll be monitoring are 2 a.m. to 5 a.m. Now the pairs you want to be trading are the majors, okay? More like pound pairs, I guess. GU, cable, right? GBP USD, Euro USD, obviously, which you can trade both in the New York and London kill zone, basically the sessions. And, EJ Euro GBP, GBP JPY, and for New York, USD JPY, EU USD CAD, all these pairs. So in the London kill zone, 2 a.m. to 5 a.m. are high probability conditions of trades playing out. That is when the proper volume kicks in, and this is what you can take advantage of and make your trades based off, basically. So there's a characteristic of London, and you'll see this. It tends to set the high or the low of the entire trading day. So let's say London session is starting on a Tuesday. If you look at Tuesday, you will see more often than not, London, between this 2 a.m. to 5 a.m., there will be a high or a low that remains a high or low for the entire day. So you can essentially catch the high or low if you're accurate and trade that whole move. Obviously, it's unrealistic catching such a big move. I mean, you'll be having a risk to reward of like 1 to 50 or something like that. All we're going to look for is a 1 to 2 anyway. But if I actually go on the M15 right now and look at what's going on, you can actually see that for the entire day, for example here, during this time, 2 a.m. to 5 a.m., it creates a high, and the whole day, that remains the high during that London session. What else? Another example here, creates a low, the whole trading day, that was the low that was created. Again, creates a low, that whole trading day, that was the low created. And these things happen so often that you can really base your trades and your strategy off them. So that's the London session, the London kill zone. High probability timings occur during this. So I've got this box marking out London. It starts at 2 a.m., finishes at 5 a.m. That is your box, okay? And the moment price comes in, your London kill zone begins, and high probability conditions or high probability trades are active and you can look for them. So let's say we had a sweep of liquidity there, we had a break in market structure, fair value gap, typical 2022 mentorship model, and then we get that move up during this time, okay? Now, ICT says that you want to be looking for a fair value gap during this time, okay? That's one thing you should look for. The second thing you should look for is a break in market structure during this time. So the break in market structure, you should be noting this in your journal. That what time did the break actually happen? If it was 1:59 a.m., that's not in the kill zone, so you can't be taking that trade. If it was 5:05 a.m., it's past the kill zone, low probability conditions. I'm not saying it's not going to work out. It might work out, but over the long, sum of data, as we say, you probably won't be profitable. And that's what it's all about. It's about having the probabilities on your side. Now, one thing I've learned from my backtesting, I've got like quite a few years of backtesting. One thing I've learned, which I want to share with you, is in the London kill zone at least, don't take trades where the break in market structure happens after 4:50, okay? So London kill zone is 2 a.m. to 5 a.m., right? So if there's a break in market structure at 4:52, 4:53, that's still in the kill zone, correct? But what I've seen, it's very low probability taking a trade where the break in market structure happens towards the end of the session. So after 4:50. Just look at your data and add this to your plan. Trust me, it's going to really increase your win rate and save you from taking unnecessary losses. So 4:50 should be the end. So technically, a very high probability time would be 2 a.m. to 4:50 a.m. That is very high probability that I've seen. Another thing you should look out for is at 2 a.m. you need to see a liquidity sweep. Okay, and I know I'm going on a lot about the London Killzone. It's just because I personally trade it and I found out so many little 1% tweaks that I'm sharing with you. But let's say we're in the New York London Killzone, 2 a.m. So now we're actually in the session and now we're looking for trades. There might be a break in market structure right there and a fair value gap forms right here, like this. Okay, something like that, fair value gap, and we can take a trade off there. Why? Because we're in the London Killzone. The break in market structure, let's say, happened at 2:02. For argument's sake. So technically, the break-in market structures happened in the London Killzone. So it's fine. Wrong. More often than not, what happens is at 2 a.m., there's a liquidity sweep, a liquidity run, and then the real setup forms. So this is what tends to happen. We come in, now we're in the London Killzone. We get that break-in market structure, but has there been a liquidity sweep? No, there hasn't. We want to see this. We want to see this liquidity sweep, and then we want to see the break-in market structure, fair value gap, and enter the trade. Obviously, in the timings of the London Killzone, you want to see that liquidity sweep. And I personally call this the London sweep. The London sweep at 2, or whenever it starts, I want to see a liquidity sweep. I want to see a run above an old high or run below an old low at 2 a.m. or after. If I don't see any liquidity sweep, I'm not entering the trade. I need the liquidity sweep, and only then will I enter the trade. These are strict rules, but you have to be disciplined and follow them. And I've learned it the hard way, taking losses, and that's why I don't want you guys to make that mistake. So these are two very, very key things you should take away from the London Killzone video. 1, after 4:50, break-in market structures are low probability. And 2, you need to see a London sweep. You need to see at 2 a.m., you want to see a liquidity run, a liquidity sweep. So that is the London Killzone. So New York Killzone, the timings you want to be monitoring are 7 a.m. to 9 a.m. Okay, just like London was 2 to 5, this is 7 to 9. And you're going to be looking for the same things. You're going to be looking for a break-in market structure, fair value gap, enter. Or you're going to be looking for, maybe an order block or something like that. Those are the ways you can enter in the New York Killzone between 7 a.m. and 9 a.m. The fair value gap should be formed between that time. Also, another characteristic of the New York session or the New York Killzone is it sets up an OTE. Now, what is an OTE? An OTE is a retracement which happens during the session. Let's say we have a move down. This is the OTE. It retraces and goes down again. And the retracement is these key levels. So mark this out on your Fibonacci tool. These 3 levels are the ones you need to be monitoring. You'll see many times that in the New York Killzone, we retrace to one of these levels. Okay, and these are my fib settings. So if you want to copy it or take a screenshot, go for it. Yeah, but this is what we're going to be looking for, an OTE, a retracement. This could be on the 15-minute, on the lower time frames. That's one thing. Personally, what I've been seeing more often is the same, entry model that I've been going on about forever. Liquidity sweep, like an old high, old low, sweep that, break in market structure, fair value gap, order block, all these things, enter the trade. And you want a higher probability trade? Okay, take this as an example. If there's a fair value gap coming down and we break through it, it becomes an inverse fair value gap. If we're breaking fair value gaps to the upside, then we're disrespecting them, right? If we're disrespecting them, it gives a higher chance that, this is a genuine break in market structure and we are going to go up. Now, if you don't understand that, let me just show you. Let's say we're coming down like this. Coming down with displacement. So we have a fair value gap there and a fair value gap there. Then we get that break in market structure. Now, if it's something like this, the break is right there, then we're still in a fair value gap. We could just be entering a pullback and then it taps into this and then just carries on going down. That's low probability. But what I'm saying is, what if we do something like this and we push through that? Not only have we got the break in market structure, which is essential, but we've also pushed through all of these fair value gaps. What's that showing you? It's showing you that price wants to go up. Then when you actually have an entry fair value gap, something like this, then you'll be way more confident entering a trade like that. Another thing you should actually look out for is that sometimes inverse fair value gaps act as entry fair value gaps. So there's so much to talk about. It's actually a lot. But basically, those are kill zones, honestly, in a nutshell. I don't think you really need to know much more about kill zones. This is essentially it. These are the characteristics. These are the timings you need to be looking out for. And I've given you quite a few tips on the London Killzone in itself, so test that out for yourself. There is a free Notion template down below which has everything. It's got a back testing template, journal template, and it's got daily markup template. So every day you can mark up your sessions, all of that. It's completely free down below. No signups or anything. Also an ICT cheat sheet down below, which is basically all the notes you need to know from ICT summed up in a Word document. So check all those things out. Still have any issues, book a free call with me. I'd love to, help you out, chat with you, get to know your issues and everything. But that is episode 5, and catch me next week for episode 6. I'm now is going to, start getting more into like technical strategy, fair value gaps, entry models, all those good things. Ton of value, and I can't wait to share it all with you guys. It's going to be a mad one, honestly. You guys are going to definitely improve. So can't wait for that. But see you next week. As I always say, happy trading, stay safe, peace.